What are the main crypto trading mistakes to avoid when trading long-term cycles? This is Crypto Intel. My name is Max. I'm your guide. Stay tuned to the end because what I'm going to do is give you a very simple way to avoid the number one mistake people make when they're trading long-term cycles in cryptocurrency. Let's get started. So let's take a look at 7 critical mistakes that people make when they are trading the long-term Bitcoin or crypto cycles. What's the first one? Not knowing your trading buckets. Now again, we've spoke about this in previous videos, but your trading buckets are how you're going to allocate your capital. Let's take an example of, say, $100,000. Let's say you have $100,000 that you want to invest in cryptocurrencies and related stocks, say, for instance. What the rule of thumb that I like to use is 75 to 80% will go into long-term trading, and another 25 to 30% will be used for your short-term trading, short-term cycles. So we're talking here about your long-term trading. You need to know how much money you're going to be putting aside for your long-term trades, and you need to be able to judge how much cash you're going to hold aside out of that bucket and how much you're going to invest and when you're going to invest. Now, we're going to talk about this in a little bit detail just a little bit later, but let's go through some of the other mistakes that people have. Not understanding the crypto cycles. Bitcoin is a 80 to 90 volatile asset. In other words, it can go up or down 80 to 90% in a very short period of time. You need to understand what the cycles are in Bitcoin. And again, we'll show you how to do this just in a little bit, but there are 4-year cycles. And basically what it boils down to is you're going to have at the beginning of a cycle, you're going to have a year where Bitcoin goes down. You're going to have a year where Bitcoin goes basically sideways. You're going to have a year where Bitcoin starts to go up, and you're going to have a year when Bitcoin goes up very strongly. Next, buy high and sell low. People, especially depending on when you get into Bitcoin, there is a very strong tendency to buy when Bitcoin is going up very strong upon going up. So again, you need to understand the cycles of Bitcoin in order to avoid doing this. Overtrading or using too much leverage. And again, this really has to do with not having a trading plan. You need to have a trading plan for your short-term cycle trades, but you also need to have a trading plan for your long-term cycle trades. You need to understand when the best times are to what they call buy the dips. In other words, Bitcoin doesn't go up in a straight line. It zigzags up and down as it's going up. You need to understand when to buy when that zig is down and when to hold. Next, blindly following social media influencers. It's very easy to just let somebody on YouTube like myself tell you what to do by what they are doing. You need to do your own research. You need to understand the context of what social media folks are saying, where they're coming from. You're going to have bears, you're going to have bulls in the social media sphere. And what you need to understand is what is there, when they're talking about pricing, which a lot of social media influencers do, when they're talking about pricing, you need to understand what perspective they're coming from. Are they coming from a long-term cycle trade perspective? Are they coming from a short-term cycle trade perspective? Are they coming from a day trading perspective? This is going to influence how they look at the pricing of Bitcoin. So you need to understand where they're coming from, and you need to do your own research. It's very important to, before you make a trade or invest a certain amount of money into Bitcoin or altcoins or Ethereum, whether it's long or short cycles, but particularly with long cycles, you need to do your own research. You need to understand, why am I doing this? And what is it going to mean for me in the future? Taking too much exchange risks is the number 6 mistake that people make. And by that I mean There is risk when you keep money on exchanges. If you're doing long-term trading and you're buying Bitcoin, say for instance, the best practice here is to go on an exchange like Coinbase or Kraken or whatever, Binance, whatever exchange you use, buy your Bitcoin and then take it off the exchange and put it into cold storage. Even if you think that within a few months you're going to be selling that, you need to take it off just to protect yourself in case something goes wrong. And then finally, not taking enough profits. And this is the number one mistake that people make in long-term trading. They get in, Bitcoin starts to go on its parabolic run, and they don't have an idea of when to get out or how to get out. Now that's what we're going to talk about next. Okay, so let's take a look at what we can do when we're doing the long-term cycle trading and how we can best approach it. The first thing, as I mentioned before, is we need to understand the Bitcoin cycle. So here's the cycles. Let's take a look at this right here on the chart. Here's the previous cycle right here, low point, a year of going up and down, a year of parabolic run, and then back to the low point again. Here's the last cycle, the cycle that we're in now. The low point, here we have a year of up and down. It doesn't look that much, but if you actually measure this, you can see that it gone up. Let's take a quick look here. From the low to the high, about 300% almost, okay? So, when you're looking at the cycle, you need to measure things. You need to take a close look at it. But here we have a year of going sideways, basically, the move up, the move back down. Now we're in, we had a year of going down. Now we're in it, again, we're in the year of going sideways. The next year will be the parabolic run. So you need to understand these cycles so that you can allocate your capital at the proper time. Now you also need to look at how you're going to feel on what the probabilities are. Let's take a look at where we are now. This is the end of September 2023. And you can see in this year, starting December of 2022, we had what so far is the low, and now we had going up, now we're going back down. This is the year of the up and down, 2023. But let's take a look. Suppose we're going to be allocating capital for the long term. We expect that Bitcoin is going to go to, say, 125,000. We're at 26,000 right today. So the question is, when are we going to invest and where are we going to invest our capital? That's the 80% of the capital that we have in the bucket that is for long-term cycle trading. So what you want to ask yourself is, if Bitcoin comes down again and touches the low before we start on a much more parabolic run, how am I going to feel if I don't have any capital at this point to put in? If Bitcoin just stays here and does nothing, and then just starts running up, how am I going to feel if I haven't invested right here or right here? So you need to take a look at the technicals. You need to understand how you're going to feel based on the probabilities. So what are the probabilities right now? Well, we have a range here. We have a range at about 31,000. We have a lower range at about 25,000. If Bitcoin is, towards the bottom of this range, so you have to ask yourself, do I want to invest here around the bottom of this range and allow it to go up? Do I want to wait and see if it breaks through this range and comes back down to test the lows again? Do I want to invest here? The middle road approach would be to do both, to have some of your long-term capital in this range here at the bottom of this local low, to have some capital aside in case Bitcoin wants to dip down lower before the parabolic cycle begins. And then have an understanding of, if Bitcoin starts to break up here at this top of this range, to have capital to put in, because that's probably when the parabolic run is going to start. Now, it's going to take a year or so once it breaks this. But once it does break this, it's pretty much clear sailing. You can see that the next level is right here at 37, and then we can go on from there. So you want to pay attention to technicals. That's important. And then finally, as we're getting in, now let's go back to the beginning of the most previous cycle right here. Right here is where we had in 2019 and the beginning of 2020. You see we had the low here. We had a movement slowly moving up, but really this is when it started to break at the end of 2020. Now here was the halving in around May of 2020 was the halving. So you see from the halving, the price went sideways to up gradually, and then about 6-8 months after halving, that's when we started to have the run up. So what you want to be able to do is look for signs of euphoria. When is it that people are, it's Bitcoin is in the news again? You see that the price is really going parabolic here. It's going up. It has a correction here, goes up very strongly, has another correction, goes up very strongly, another correction, up very strongly, another correction. Once you see this kind of pattern forming, then you know that things are getting very frothy. And it's at this time that you need to have a sell plan in place. And this is the most important thing to remember about doing long-term cycle trading. You need to have a sell plan. You don't want to get yourself caught thinking that Bitcoin is going to continue to go up and then miss out on taking your profits. So let's look at that and see how we can have a plan to sell when Bitcoin is becoming euphoric. Okay, so how do we put a sell plan in place so that we don't miss out in selling the Bitcoin when it gets near the top of our long-term cycle trade? So let's take a look at this. Let's look at the previous cycle here. You can see that this was the top of the 2018 cycle. And what happened was there was a year of going down, there was a year of going sideways, and then we were in a range. Just draw some lines here. You can see that we were in a range. We went up and we went down. And when we broke that range, that's when we started to have the parabolic move. And that took from around November of 2020 to April of 2021. And if you look out further, actually to November of 2021. So it took about a year or so to get to the cycle top. Now, what happens is that, let's say we're here, right? Once we pass the top of the previous cycle, we don't know how high it's going to go. So how do you do that? Well, here's what you do. Let's run what we call a fib retracement. So we're going to start here when it broke through the long-term channel. We're going to start our fib here. We're going to go up to the top, and then we're going to go down to the low right now. Now, we don't know if this is going to be the actual low, but let's say that it is. Now, if it goes a little bit lower, we'll just draw this fib down to where it goes, where it ends up going the lowest point before it starts going up on the parabolic run. But now we can easily see some levels of where to take profits. So you can see here that once we passed the high of the last cycle, which was around $69,000, we don't know how high it's going to go, but we can see by the fib levels of where we can take profits. Here's one area at 72. Here's one area at 87. Here's another area at 96. And here's an area at 107. So, and we can keep on going, the 2.7. So I would say, based on if this is the low for this cycle, it seems to me that where you want to start taking profits is right around the 1.2, and then again at this level right here at 108,000, again here at 140,000. So as Bitcoin is going up in a parabolic run here, you have levels that you can take so that you can take some profits. And this is an easy way to be able to see where Bitcoin might top out in the next parabolic run. So that's all for today. If you like the content, please give us a like, sign up, and we'll talk to you next time.